given we have better data, we're still not seeing any sort of change in the narrative when it comes to the renminbi right now. This seems to be a Fed story still.
Yes, exactly. So I guess to go zero in on the yuan fix today, as David had mentioned, it's kind of around 1350 pips. We're not seeing it at the strongest fixing gap since late last year when we saw the yuan, I think, hit 7.35, and that was the weakest on record since we've been tracking the data. I think what we're now paying attention to this week is how much the PBOC will tolerate the yuan hitting that weak end of the trading band, right? So we have this range today. The weekend is 7.2368. And as David mentioned previously, the offshore has already been trading weaker than the weakest part of the onshore. So you see all of this really bearishness sentiment still really building. In previous episodes, the PBOC had squeezed shorts. They had tightened liquidity offshore to just basically punish all the bears. We haven't seen it as dramatic as it was last year. So you have to ask the question, is this time different? Because now they know it's really driven by this yield differential with the U.S. And just kind of putting it out there, we're still around 280 pips on the 2-year for the CGB versus the 2-year on the Treasury. So it's still very wide.